Okay, Mayuresh Joshi is with us as well. And Mayuresh, if there's one pocket that stood out for the wrong reasons, of course, yesterday, were the tire names. Maybe because of the Shanghai rubber prices moving up, or maybe they are overbought, or a combination of factors. But these stocks corrected thick and fast yesterday. What do you think is in the offing? Do you believe there is some more downside to these names?
Morning, Neeraj.
Morning.
Every possibility, because the kind of run-up that you've seen in these stocks has been quite exorbitant over the last few weeks. And though I think the story structurally remains quite positive in terms of volume growth for both the OEM market, whether that be two-wheelers, four-wheelers, and even the MHCV sales expected to pick up over the next few quarters, it is largely the replacement market where the margins are probably much higher. So I think the Chinese imports there have been quite large, and to that extent I think the margin erosion was quite sharp. The fall in rubber prices, the expectations of policy expected to come through, I think has aided the price movement of these stocks, but valuations were nowhere comfortable at the levels at what these stocks were trading. Again, I think the commodity driven moment which has driven up EBITDA margins might have a ripple effect in terms of how earnings will pan out for Q2, but largely I think the valuation comfort is not there at the current juncture. So I think it's money being taken off the table for tire stocks at this point of time.
Mayuresh, let's talk about the private banking space. Now, ICICI Bank yesterday benefited immensely because of that SR Group exposure. But do you think it is time to seriously revisit wholesale banks? If the economy is turning around and if corporate India is committed to delever them with their balance sheets, ICICI Bank will benefit disproportionately, but an Axis Bank or a State Bank of India will also not be far behind. So do you think somewhere in the next 2-3 months the leadership pattern in the market will change from retail banks to wholesale banks?
No, largely, Nico.
Yeah, my own take is that the banking space, specifically the larger private sector banking space, should do well. Retail has held up pretty well, and even for this quarter, our own sense is that retail loan growth should be quite large. So in that sense itself, when the corporate or the wholesale banking segment exposure is concerned, the asset quality pressures thereof, our own analysis are concluding to the fact that for a larger part of FY17, larger amount of credit costs have been actually embedded into our working calculations. So for ICICI Bank, you're probably looking at 200 bips in terms of credit costs. For Axis Bank, in excess of 170, 180 bips. So to that extent, I think the kind of provisioning that is expected to come through, the kind of watch list declarations that they've done and the loading of watch lists that they've done in Q2 and expected to continue in Q2, Q3, I think a lot of sheen in terms of asset quality pressures will actually be taken off the balance sheet. So in that sense itself, I think the expectations of earnings growth recovering thick and fast in FY18 with credit costs coming down, with expectations of loan growth improving significantly and absence of interest rate reversals, that is going to have an uptick on their NIMs. So to a large extent, I think the markets are trying to gestate that Q2, Q3 might be the worst quarters in terms of recognition and provisioning, but thereafter I think the recovery should be quite balanced out and the recovery should be quite fast and rapid. So in that sense itself, I think I remain extremely optimistic on the larger private sector banking space.
Okay. Himang, any ideas that you want to share this morning for our viewers? Any investment ideas?
Yes, Neeraj, Emami is something that we've been liking for a long time. It has presence in the underpenetrated categories like antiseptic cream, cooling oil, and couple of other products. Also, their Ayurvedic portfolio under Zandu brand is growing at almost about 26%. And we believe that this is one of the companies where the volume growth was somewhere in the range of 16 to 17%. And given the fact that most of these categories are under-penetrated, the overall volume growth is going to be pretty good. And Cash King, which they had acquired, has also contributed to the tune of about 65 to 67 crore as far as the bottom line is concerned. So we like this stock, and we think that given the momentum which is there in terms of volume growth, one can really look for about 12% kind of an upside from current levels.
Stocks which we will, the likes of FEM, which had a 14% rally yesterday, and I think very interesting to see if that has a bit of a pop-up today as well or no, or an M&M Financial which actually corrected quite strongly in trade yesterday. Let's see if there is follow-up action. But let's discuss the trade setup. The trade setup indicates that we'll not start sub 8500, we'll actually have a start in the green. 8560 is what the SGX Nifty is indicating. Do watch out for ICICI Bank. That should be a very interesting stock today after a big move that has happened yesterday. Let's see if there is follow-up buying in light of the fact that the rest of the Asian markets are also stable and we may start off in the green. So ICICI Bank is one important stock. Then there are a bunch of mid caps and small caps. None more so important than GNFC. I think it will be very, very interesting to see what this stock will do today. Zensar Tech, wherein the EBITDA margins have expanded a bit, should be interesting to see what this has done as well in the session. And then of course some bulk deals that have happened. Interesting buy and sell numbers out there for smaller names like JHS, Svenga, Dhanseri Tea and a few others. So that is something that we should be watching out for as well. Shriyam IPC could be another interesting small cap in news, as well as the RT20. However, the first rates on the pre-open session are here, and we'll start off on a good note. I think that goes without saying, quite frankly. The Nifty is indicating some downside. The Sensex about a 25-point upside. I reckon the bias is towards the upside. I think Z has this unnatural downtick which is dragging the index lower, the Nifty lower, which I think will change as well. But Z, remember, has been a big culprit the last few days of a sell. Let's see if that changes today. Do watch out for ICICI Bank. That is the big mover in the session yesterday, and let's see if there is follow through buying. Actually, Axis is the other one which hasn't quite rallied in the same league as ICICI yesterday. Let's see if there's a bit of an upside to that one as well, and then a bunch of other mid caps as well. The currency is not started off too badly, 66.78. That's about a 10 paise uptick that has come into the currency as well. One short call on Shriyam Transport could be an interesting one. Do watch out for that, and a bunch of mid caps, of course, which we will talk about as well, including Shriyam EPC, GNFC and a few others. So do watch out for all of these names this morning. However, before we get in the brokerage view as well, let's find out Mayuresh's opinion on some of the other newsmakers and big movers in trade yesterday as well. Mayuresh, have you looked at the NBFC space recently, and in particular M&M Financial, because contrary to all expectations of this counter coming out with good numbers, in the run up to its results, it's actually weakening quite strongly.
Now again, Neeraj, I think the entire theme has been how the asset quality has panned out for M&M Financials, and in expectations of good monsoons panning out, the expectations of asset quality pressures easing off over the next few quarters have been built in to the price, because the price movement for M&M Financials has been quite sharp. Contrary to the fact, I think if you look at the numbers that are actually coming through, I think the numbers are still weak and expectations are still pretty clear that the numbers will improve only after Q3. Having said that, probably I think even the transfer of their bucketing list in terms of provisioning, I think that will have elevated provisions on their balance sheets for Q2, Q3. So in that sense itself, I think valuations looking a little stretched at this point from the FY17 perspective, but I think results will do the talking for M&M Financials. But my own sense is that assuming all these conditions playing out, Q3, Q4 onwards, you can expect normalized growth to start taking place on the balance sheet. And because a large part of recognition has already happened over a period of time, I think the asset quality pressures should also start receding. But one really must take cognizance of the fact that valuations are really looking stretched at this point of time.
Hemang, at what level you would say that TCS and Infosys now are a great value come contra buy? I mean, Hemang, let's be real, these companies will not shut down. It's a temporary pain which they are going through because globally the technology generation is changing. So at what price you would say, look, I would buy these stocks if I'm a general long haul investor?
So because the issue with some of these IT companies is that one is not really sure about, the kind of dollar revenue growth that they can, sustain over a longer term. And if you see Infosys, back to back 2 quarters, we are seeing, downgrade in the guidance. And we think that if the core or the legacy business is, not giving you the volume growth somewhere, eventually, though some of these companies are maintaining their margins, but that margin pressure could well be there over the next couple of quarters. So I think that rather than trying to look at, a situation where you can say that, okay, at about 11, 12 time kind of a forward P, it makes more sense to buy these. I would be more comfortable about buying them when I see a decent growth coming back, when the management itself says that, okay, we can grow at about 12, 14%. I think at least in the near term, given the macro scenarios which is there, given the delay in the scale up etc. that we are witnessing, the change in the business model towards digital, I think that growth is unlikely to come back. So I don't see a case for any kind of a re-rating in the top IT companies. So I would definitely stay away for a while.
Hemang, what is your take on cement? Given that we've not got a good picture from Ultratech, there is a volume challenge, margins are not best in the industry, the advantage of drop in raw material prices which is coke, that's behind them. Do you think cement as a sector will struggle, A, because of low growth and B, because of rich valuations?
See, cement has been our preferred space to be in, but what we believe is that now if you look at some of the large cap cement companies, they are priced to almost perfection, and we're not seeing a meaningful volume growth if you look at the numbers of Ultratech and maybe few other companies. So in a situation where the valuations are on a higher side and you're not seeing any kind of a meaningful revenue growth, it would not make sense to go out and buy at this point of time. But from a 1 or 2 year point of view, given the kind of thrust which is there on the infra side, we think that the cement growth can come back to about 6 to 8%, and the operating leverage could play out in a big way. So if there's a maybe correction of about 8 to 10% in some of these names, I would definitely go out and buy. But at this point of time, I think the valuations are not looking attractive.
The last few days. If I just look at the pre-open rates right now, I think Kotak Bank is showing an indication of that as well. So bring up Kotak Bank for our viewers, and from levels which were northwards of 825, Kotak Bank is now trading at around 760. Siddharth Bhamre had a sell call yesterday on HDFC Bank as well. That one too has shown signs of weakness. Siddharth, these two names, would there be a trade this morning with the market starting off a bit higher?
Well, I am negative on Bank Nifty. Yesterday we did see huge amount of short covering in that index also, thanks to ICICI Bank. But barring ICICI Bank, none of the private sector banks are suggesting that there will be a big run up in them like ICICI Bank. So even Axis benefited out of whatever the outcome which resulted into ICICI Bank going up so significantly related to SR. But it gave up all the gains. So for me, in private sector space, the best trade is to short Axis Bank, then HDFC Bank, and then probably Kotak Bank.
What else? Aarti Industries is showing that small uptick on tiny volumes. Keep in mind, we've told you before that the acceptance ratios in Aarti Industries as well as Aarti Drugs is very, very small. So if you're buying it thinking that you have the share right now and you will tender it and you will get a price of 800, please be wary, that will not happen. Just keep that in mind. The acceptance ratios are minuscule when it comes to both of these names. However, let's talk about some investment ideas as well. And actually, just before we do that, since we are on the topic of banks, let's get in Avan in. She's dissected the Bank of America Merrill Lynch report on ICICI Bank. Remember, it remains the stock which is a top draw right now. Avan, fill us in on the details.
Absolute top draw, and in fact Bank of America is very upbeat on the prospects. They believe a lot of the positives are not even being not being undervalued right now and really need to be looked at closely. First up, Bank of America maintains a buy. They've placed a target price on ICICI Bank at about 320, and they believe that the recent large deals will help the bank to lower their stress on the loan book all in all. Not just that, they believe that of course a big trigger was the news of the SR deal, and ICICI Bank has been one of the largest lenders to SR, an estimated exposure of around 15 to 20% of the group's overall debt, so naturally will stand to be one of the biggest beneficiaries of the news. They expect equity infusion by the promoters in SR Steel, very important for successful for S4A, and ICICI Bank has also been in the process of monetizing their stake in subsidiaries, and this has led to building up of their contingent provisions. Not just that, Bank of America is also saying that they believe that the market is currently underestimating the benefits of ICICI Bank's expanded distribution as well as their technology. There are a lot of positives as well in terms of catalysts that one can watch out for ICICI Bank in the near to medium term, and that will be largely contingent on improvement in overall macroeconomic growth, and even asset quality improvement is on the cards. In fact, they believe that the bank has a provisioning cushion to deliver about 10 to 25% growth in their EPS over FY17 to 18.
Thanks a lot for that, Avan. And yes, we will watch out for ICICI Bank quite closely. But I tell you what, today, I think there are a bunch of other stocks that you need to watch out for, considering the fact that the Nifty will start off on a fairly happy note. We'll probably have about 0.5% kind of an uptick, or slightly less than 0.5% maybe. The Sensex is pointing to 126 points in the green. No one big mover. I think a clutch of names in the end of the pre-open session, a clutch of names moving up about 1%. So difficult to see, difficult to say how long will this last, but that's the kind of participation that we may have at the start of the trading day today. Mayuresh, any investment ideas for our viewers? Anything that you reckon people can buy into in this bout of slight negative bias that we have in the markets currently?
So one of the stocks needed that we're probably liking at this point is Mirza International. If you look at the profile, exports account for 75% of its total revenues. The UK market specifically, I think they've got a decent market share there, specifically in the men's footwear segment. If you look at their branded segment itself, Red Tape is a well-known brand, and we are expecting 24 to 25% CAGR growth on the branded segment itself, close to 324 odd crores. This will probably happen through the 1,000 outlets that they've got, including 120 exclusive business retail outlets, which are probably expected to expand to 200 next couple of years. They've also done a small acquisition by the name of Genesis, which has greatly improved their return ratios as well as their capacity from 5.4 million units to 6.4 million units. So taking into facts all these conditions, our own sense is that top line growth of 11% over the next 2 years is not ruled out, close to 1,150 odd crores. A similar growth on bottom line, close to 97 odd crores. My own expectations are EBITDA margins close to that 18.5%, and EPS to expand to around 8 rupees. So I think any declines onto the stocks, long-term investors can look at this in a very staggered manner.
Right. Mayuresh, I'd like to draw your attention to what's going on in the metal space. Now the outlook for metal is not rosy, markets themselves are stalling a bit, but I'm a bit surprised that there is no free fall in a Hindalco or a Tata Steel. Typically every time when markets have panicked or they've reversed, metal gets hit the fastest and the first.
No, absolutely, and Nikunj, I think the entire theme will now play out in terms of how the demand recovery takes place, and demand recovery is still looking extremely patchy, specifically in the overseas market. With the imposition of MIP and the other impositions that the government has done, you probably saw realizations improve to a great deal, specifically in the domestic market. But whether that has actually got demand back on track, really doubt that, at least at this point of time. For stocks like Hindalco, probably I think the smelters are running at full capacity. You're probably looking at mining operations beginning, which will reduce their cost of operations. But you look on these stocks on a EBITDA basis, and I think when you're looking at the international scenario and LME pricing specifically in terms of aluminium, zinc, lead, I think it is not giving an encouraging trend that these prices are going to move up significantly. So that sense itself, again on a valuation perspective, I think these stocks are fairly valued at this point of time.
Okay, we're just about 2 minutes away from the open rates. Let's get in one top idea from each of our experts. Siddharth Bhamre, let me start with you first. Your top call?
So Hero MotoCorp would be the top call. That would be on the short side with a target of 3250, stop loss of 3488.
Kunal, your top idea?
It would be a buy on SBI, target to 66.
Okay, stop call on SBI with a target of 266. And CK, what would be your top call?
Well, there's a consensus here shorting on Hero Motor. That's my idea as well. So would look for lower levels on this one, short at current levels with about a 30-35 rupees stop loss.
Okay, so those are a bunch of trading ideas as well. Hemang, just very quickly, 30 seconds. Any idea that we've missed out from you? We've discussed Emami. Anything else? Quick 30 seconds, Hemang.
Well, we like Zydus Wellness. I think the kind of focus that they have on certain niche categories like sugar-free and other young population based products like Neutralite, etc. We think that there is going to be a decent volume growth, and the company has a market leadership in many of these categories. They are working at a negative working capital cycle and generating a cash flow of about 300 odd crore. So I think these kind of companies with niche products and a decent margins would present a great investment opportunity. The stock has run up about 10-12% post the numbers, but we think that there is a case for another 10-12% kind of an upside.
Okay, we'll discuss this in detail, but about 40 seconds left. Let's get you the top 5 things to watch. I think Ultratech, the volume degrowth and the weak management commentary to weigh in on peers. So watch out for that. Zensar is below estimates. Analysts see single-digit revenue growth as well, so that could weigh in on Zensar today. Watch out for Havells. That's the big number for the session. Revenue seen at 12%, but some short positions piled on. Should be interesting to see what that one does. Aarti Industries and Aarti Drugs would probably see subdued response to the small buyback given. And Indian Oil, of course, goes ex-bonus. Sunil High-Tech's stock split into 10. These are some which will have a price gash today. Don't be alarmed by those. But here are the first rates on the pre-open session. Remember, or rather on the open, the pre-open is suggested that we will not have some big bang moves on the Nifty names. A clutch of stocks will move about 1.5%, and that's what we are seeing. BOB, Axis, in fact, an Infosys has some marginal upside. So these are some stocks that are inching up in the open rates. The Sensex has quickly gone past 0.5% mark, so 144 points up, which is actually a fairly good sign. What is ICICI Bank up to? Should pull up that one as well. That was the big mover in trade yesterday, and both Axis and ICICI Bank are actually living up to the kind of mood check that we had on them yesterday as well. Adani Port is interestingly the top gainer on the Nifty, up about 0.5% or 1.5% actually. L&T about 1458. Yes Bank ahead of its numbers, 1260. Some gains in TCS and HCL Tech. So must say CNXIT as well as the Bank Nifty are not having a bad day. In fact, now we are up about 0.7%. It's actually a very strong move on the Sensex, up about 200 points. And the broader markets are participating as well. So it's actually not a bad start at all. We're actually having a very, very good start to trade. What is not doing well? Zensar Tech, we spoke about it. I think the numbers weren't the happiest, and Zensar Tech is showing that. So that stock is down about 5% in trade. Aarti Industries has some uptake. So I think people like the price, even if the acceptance ratio is small, up about 4% for Aarti Industries. Not so much for the drug company, 3.5%, but Aarti Industries is certainly up and active, 734 and counting. So that is looking very, very good for itself. And then a bunch of names. Arvind, for example, at 358 is not doing too badly. Kansai Nerolac has started off in the green, about 2.5%. So that one too is doing okay. Just want to pull up yesterday's top performers. FIEM had a 16-17% rally yesterday. Today, just pausing for breath, and rightly so. It just had a blowout move in trade. So that is one. M&M Financial is the other one, which corrected about 5% in trade yesterday. Let's see if that is reacting a bit. No, not too much. Actually fairly flat in the session. Indian Hume Pipes has some news bit to it, and that one is up about 15% in trade. Om Metals and Infra starting off a residential project in Jaipur. That stock is up about 12%. Careful though there. And Shriyam EPC is up about 11% on winning their order of 61 odd crores. It's a small company. Maybe traders like what this company has done. The volumes are okay, 61 crores order, and that stock is not doing too badly. Diamond Power and Infra, you heard the management yesterday on the channel. That stock is up about 10% in trade. So these are a few stocks that are certainly standing out in the session, but it's a strong buoyant start for the indices. Any trades that you would take on? CK, let's start off with you before we move on to Aisha and Nikunjan. They identify some stocks, but CK, anything on the index that you would do right now?
Well, on the index, I think I'll wait for 8600 and see whether that can really sustain. I have my doubts. We do have a decent start, but my sense is that we are going to range in a small band of about 30-40 points. So that wouldn't really make for good trading from a direction point of view. So right now, no, the answer is no, I don't have a trade on the index.
Well, no trade on the index considering it's flat as flat can be, but look at ICICI Bank. That clearly is seeing a follow through, as CK earlier had indicated, that after that big breakout in the stock and the kind of recovery that we saw in ICICI Bank, we perhaps may see some follow through. That follow through clearly is kicking in. As I speak right now, you've got ICICI Bank futures holding up by about 2%. The top of the charts though is Dish TV with a 3% gain. You've also got a Divan Housing. Remember, this was a mover yesterday too. Today too, it's seeing a bit of a scale up, 1.6% higher. You've also got Allahabad Bank as well as Andhra Bank. So clearly, yet again, for a second day on the trot, while it's flat for the index, the traction clearly is in the broader markets and within the banking pack. And CK, just want to get back to you. What a great call in ICICI Bank, seeing a follow through. But do you think that if indeed the market is going to get a little wobbly towards the intraday session, ICICI Bank could cool off, or do you think this is going to stick by with its gains?
I do believe after that success they'll be back trying the same thing today, and clearly the sharp uppish movement that we have seen right off the bat near the open is indicative of the fact that the larger players are in there buying the stock and shorts are cutting. So I do believe that ICICI will probably continue and not really fizzle out at high levels. I don't believe selling will come in right now, so it should trudge along with some more. 200 to 70 to 272 is the minimum target that one could keep on ICICI Bank for now.
Well, it's not that everything is centered around ICICI Bank. Remember, wholesale banks would benefit, and that is the definition which I'm trying to identify. Now let's look at SBI and also progressively look at what's happening to Axis Bank. Hemang, let's keep ICICI Bank away from the expression. Do you think now State Bank of India also could be a serious outperformance stock, because they've got exposure to the steel sector, the energy sector, the metal sector, and also State Bank of India is looking at monetizing assets or some of the non-core assets also.
I think, Nikunj, this current development has given some kind of tactical buying opportunities for some of these banks which have a larger exposure to this troubled account, and the market would start pinning their hopes on revival in few more such accounts. So yes, I think you can expect some more upside in names like State Bank of India or Bank of Baroda. Axis Bank somehow is not showing that kind of strength, so I would avoid it for now. But at least State Bank of India, Bank of Baroda, I think there could be some more upside. But I think that would be more of a tactical buying opportunity. I don't think we can really make a case for a sustainable up move in some of these names, because the core growth would come only from the banks which are focusing on the retail side. I think because there is an under ownership in some of these names, and the fact that this entire development has come in as a positive surprise, so that is presenting an opportunity for playing for about 10-12% kind of an uptick in these names.
By the way, just some stocks. HCL Info is starting off, remember, on a good note. Remember, it was a stock in focus yesterday. Some news flow is expected, is what a bunch of market dealing room sources are saying. So watch out for HCL Info in the session today. Bring up HCL Info, yep, right there, 1.5% up in the session. And Ken could well be a stock in focus today. I think it will have some news flow to it sometime during the day today. So watch out for Ken India as well. 223, maybe about 1% kind of a rally. Okay, just before we get in, some closing thoughts from our fundamental experts. Kunal Bothra, anything that is standing out for you in this brisk start on the index?
Yeah, I think first of all on the Nifty, I think the view remains the same. 86.67 is the target which I am looking at. So I maintain in the buy which I had given yesterday as well as today morning as well. In terms of individual stocks, not to be repetitive again, but I think Godfrey Phillips still looks to be very good. It's making consecutive highs almost on a regular basis, so I maintain the buy on the same. And the second stock which has just broken out, again mid cap name is Uflex. I think the stock consolidated for 6 or 7 days on a trot. It corrected to sub 300, but now it's come back to 313, 314. I believe it's a good chart pattern on a short-term time scale. So maybe a retest of the previous high is what one could look at, a target of 328 at least from 1 to 2 day horizon. So buy on Uflex, stop loss on trade, I would keep it at 307.
Buy on Uflex and a buy on Godfrey Phillips. Those are a couple of stock recommendations from Kunal Bothra this early, by the way, under 2.5%, 1528 and counting for all those who've been watching the channel. And if you got into Godfrey Phillips at the earlier levels as well, I think it's been a terrific story, not just today, the last 3 days. Siddharth, anything that is standing out for you?
Well, market is open on a strong footing, but then I don't anticipate this to sustain for a longer period of time. Yes, we might see further upside of 0.5% or more, but what I am seeing positional, and that's what I do, is that there is Nifty futures open interest at 3 months low, We have seen that maximum unwinding of this is because of FIs unwinding their long positions, and we are seeing that domestic guys are buying stocks and indices near their support level. So there is a change of hand where foreigners are selling or moving out of their positions and domestic guys are buying. Historically, we have seen whenever this has happened, your markets have not given you a substantial upside from those levels. So I will be maintaining my stance of being cautious on this market and using opportunities of these opportunities, market giving you a bounce, to go short in market rather than going long.
Okay, be short on the market rather than going long. That's the word of advice coming in from Siddharth Bhamre. But just want to check in on some of the other numbers as well. Remember, Lakshmi Vilas Bank has approved a fundraising via the QIP route to look after that stock as well. You've also got Zee Entertainment, the numbers, and then of course HDFC Life as well, wherein the numbers have been extremely strong for the first half. Just want to check in on what DCB as well is up to. Remember, they saw a great earnings reaction just coming in yesterday. Was a big mover. So let's see what DCB Bank is up to, considering again, you know, for a second day on the trod, all actuaries within the banking pack. So be it ICICI Bank, be it some of the other smaller ones, the Yes Bank as well, they're all holding up very, very smartly. Also added to the list of gainers, Tata Steel, which has made a bump up of about 1.5% as I speak. Divan Housing and Adani Ports as well has jumped up quite smartly, and Dish TV of course is sitting at the top of the pack. But Mayuresh, just for the benefit of our viewers, you've got a call in Mirza International. Why don't you reiterate the strategy and the rationale behind why you like this counter?
Well, largely, Aisha, I think if you look at their business mix, 2/3 of the revenues comes in from the export markets, and within the domestic markets itself, the branded sales have held up pretty well. So Red Tape is a well-known brand in the footwear market at this point of time, and we're expecting branded sales to grow at a compounded rate of 24% over the next couple of years. With the acquisition that they've done, the return ratios improve, so does their capacity from 5.4 to 6.4 million units. What this does to the return ratios, I think the return ratios improve sharply, and you're expecting a top line and a bottom line growth of 11% respectively, which effectively means that OPM is getting maintained, the leverage plays on the balance sheet.
Okay. Mayuresh, we'll leave it at that. Thanks so much for being with us today and giving us your thoughts. Hemang, your idea, we discussed it briefly, but if you want to reiterate it for the benefit of our viewers.